So recently I received a comment on one of my videos that read, "Seriously, you know it's difficult to obtain a business loan. Seriously, it's going from bad to worse, the world is coming to an end." So that comment actually hit me because I thought about it for a minute and thought, what are the reasons that are both appearing to be more difficult and why it is actually indeed more difficult to obtain a loan for your business. So in this video I'm going to go over the reasons it is getting more difficult, what the consequences are of those reasons, and how I see the whole thing rebounding in the future. Welcome back to Mystery Money. My name's Nick, and if you're new here and looking for some money tips and tricks or ways to make your business run more efficiently, or you're just looking for more information about starting or growing a business, start now by hitting that subscribe button and turning on notifications so you don't miss anything. If it seems like it's getting harder to get a loan, it's not just your imagination. The fact that creditors and banks are getting more strict on lending money can all be attributed to three things. The number one is the current amount of debt in all sectors of the economy. As it stands currently, the national debt is at $29 trillion and counting. This equates to roughly $88,000 per U.S. citizen or $236,000 per U.S. taxpayer. This amount has increased exponentially over the past several years, and there's no signs of it slowing down. The other two levels of debt that are concerning are student loan debt at $1.7 trillion and consumer credit card debt at $1 trillion. While credit card debt did decrease somewhat in 2020, mostly because people stayed home and didn't spend as much, they may have been able to save a little bit of money. They were also provided stimulus in one way or the other that could have helped out those debts. But fast forward to 2021 and we start seeing that credit card debt, now that people are able to go out and shop and spend money and eat out at restaurants, that they couldn't do during 2020. And I know what you're thinking, what does it matter if my credit cards are high as long as I'm applying for a loan for the business? But in all reality, all of that debt follows you whether it's in your personal name or whether it's in the business name. Creditors are going to look at what your monthly payment history is, what's available for your credit card debt, what's available for your house payment, and what other debt is outstanding when they're making a credit decision. At the end of the day, if your business can't pay the debts, you're going to have to pay it personally. If you live a more lavish lifestyle personally, then the lenders or creditors are going to wonder what happens if your business starts failing. Are you going to be able to pay those debts out? It's all in a global perspective when it comes to lending money. The number two reason is the amount of economic stimulus that was pumped into the economy over the last 2 years. There were a number of programs that the government instituted that provided both direct checks as well as low-cost loans to help spur the economy. With all of that money in the economy, it devalues the amount of money that's left, and that's also lending itself to the levels of inflation that we're seeing throughout the economy now. There's much smarter people than me looking at this, and they say it's transitory, but if you look at basic economics, if you put more money into a system, prices will increase. This just has to do with simple supply and demand. The fact that you have demands for goods and services, and now there's more people and more supply of money than they normally would have had, this is going to cause the prices to increase. The third reason is going to be unknown. It seems like every day there's another, I won't even say the word here, but it increases the numbers and they talk about more bad news and hospitals and things like that and economic uncertainty. Banks are in the business of lending money to help businesses grow, expand, and pay back their debt. Contrary to popular belief, banks do not want your house, your car, or anything else. They're not in the business of selling your goods. And basically with all that uncertainty, the banks aren't sure where the economy is going to go and where they want to put their money. If it's in small businesses, if it's in investments, things like that. There's a lot of decisions going on outside of the realm of just small business. So now that we know the reasons why the banks are hesitant about lending money, let's talk about the implications of that. When it comes to the reasons, let's talk about the debt. If you take on more debt, that means that more of your monthly salary or income needs to go to service that debt. And let's say the business has issues with suppliers paying them or vendors paying them. You may not have a choice and you may have to take money from the business to pay your personal debt. This is going to leave less cash flow available to service the business's debts. Banks will always look at the worst case scenario. If something were to happen, who is going to pay that debt? If the business is struggling or has a down year in sales, then the money to pay that debt has to come from the personal income or the personal assets, and there may be nothing available because you're highly leveraged. So the second implication is with the stimulus. The fact that the money was pumped into the economy both business and personal, there's really no true financial statements when it comes to a business. Let's say your business was shut down for the entire portion of the pandemic, and you were given PPP money, EIDL money, and other government stimulus of some kind. All of that cash flow will hit your balance sheet and your profit and loss statement, and this is going to skew the numbers. In one of two ways: either it will take a business that was on the verge of possibly going out of business and was able to prop that business up enough to make it through, or it's going to take a business that was doing very well despite the pandemic but still receive stimulus money and make it look like the business was doing even better than it truly was. There were some industries that made out exceptionally well during this entire time. I hate to say it, but in all reality it's true. The government did not discriminate when it came to handing out any kind of economic stimulus payments. Now, that being said, it's not to say that the future there won't be some sort of audit, or the government may come back potentially and look at those and say, hey, did you really need the money? Whatever, I'm not one to judge. But at that point in time, the money is spent, gone, and done. Most financial institutions will take a look at the 3-year period of financials in order to see a trend. If you've been in business for 20 years and you can show consistent financials either prior to the pandemic or even during the pandemic that line up similar to what your historicals were, it's going to be a lot less difficult for that lender to say yes to that business. Now, if you've only been in business for a year or two and during that time you were impacted by the pandemic, then it may be a harder decision for the bank to lend you money. My hope in all reality is that most businesses were able to utilize any kind of economic stimulus that they got in order to put their business in a better position. But even if that is the case, it still may be difficult for you to borrow money. Going into the future, lenders are going to be extremely cautious over the next few years. Like I said, they look at 3 years of trend lines. If you only have 20, 21, and 22, it's going to be hard to make a decision that historically it may not have trended positively. Over the next few years, lenders are going to be more conservative than they had in the past. There's going to be more scrutiny when it comes to lending money to those businesses that have only been up and running for a few years, mostly because of uncertainty with the financial information. When you're going to obtain a loan, make sure that you have everything documented and you're fully transparent with any stimulus that you received. During any period at all, make sure you can address it before it comes up. If the lenders have any questions about the stimulus, what you used, make sure you have clear and concise records. That way you put yourself in the best case to borrow money. The last one with uncertainty is going to be, until we're back to a more stable or even a stable normal, the banks are going to be cautious lending money of any kind to pretty much anyone. That could have potentially negative consequences during this time. Let's think about the gyms, the restaurants, the bars, the athletic facility. Any of those types of businesses may find it difficult to borrow money in the future. Now, if you were able to pivot during the pandemic and potentially make out better than you would have, speak to those positives when you're speaking with a lender. Let them know that you were able to make your business even more successful given the circumstances, and that will be a huge benefit in your ability to get the loan. Thank you very much for taking the time to watch this video. I hope that it gives you a better understanding of where lenders are when it comes to lending money and why they may be hesitant giving loans out during this current economic environment. If you have any questions about anything I went over in this video or business in general, make sure you post them in the comments below. And until next time, have a great day.